Hello, welcome to another episode of Daily Market Mastery with me, Rauchenwald. On this sunny Tuesday afternoon, markets will open in 4 minutes or 3 minutes and 45 seconds. As always, in Daily Market Mastery, we're going to take a look at my portfolio and my forecast for certain stocks and indices or in assets that I'm invested in already or considering to jump into in the near future. Before we get to that, however, also as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And last but not least, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, is linked in the description down below. And the one thing I recommend for those of you that tune in for the first time is actually to go and check out the Elliott Wave principle, which you can read online for free if you're using the link in the description down below. Additionally, for you or all you Elliott Wave enthusiasts out there, you can also find a one-page cheat sheet that has all the Elliott Wave patterns and a lot of additional information about them on one simple page. But understanding this one-page cheat sheet requires that you already have at least a basic understanding of Elliott Wave principle. Now that said, let's jump into it and actually let's start with, as usual, GameStop. So GameStop started to move a little bit started to move end of last week in a way that we did not expect or consider likely. We still have to wait. So not much changed from yesterday, to be honest. So we're still waiting to see if we will stay above the 22.31 to make this in or turn this or potentially turn this higher. Kashi, great to have you here. Turn this potentially into a impulsive wave, so 1, 2, and from here, or to break below the 22.31 to basically confirm that we'll have another impulsive wave that takes us down here a little bit further to pretty much, I'm gonna zoom out a little bit, maybe a daily chart, to pretty much finish up whatever corrective pattern we either have from here or still part of this corrective pattern. Either way, we are here in a waiting position. I'm still holding my shares and I don't plan to change anything there. Those of you that watched the previous streams know that I have call options written. So basically, if GameStop were to go above 35 by this Friday, my shares would get called away. If it stays below 35, I keep the shares, and either way, I pocket the $44.70 times 4 times 5, so close to $250 in premium for the 11-day period that we held that option, or sold that option actually, that we were short that option. Yeah, obviously a higher price, closer to a $30 strike price, means we could get more premium for next week. But either way, we're just going to continue to write options every week against those shares until they eventually get called away. And yeah, that's what we are going to do in GameStop. So in GameStop, as said, sadly, there is not much to do other than wait. I mean, we're looking on a 4-hour chart. So obviously, every day we only get a handful of candles on the chart. So it takes time for a pattern to develop. Now, before we look into the next thing, Akashi, how are you doing? I'm gonna open up my activity statements so we can look into the stock yield enhancement program. So which of our shares were lent out and how much did we get for them and how did it change day over day? So we're gonna open up the report for yesterday, and parallel we're gonna open up the report for, wait. There's a Sunday report. Interesting. No, it should be a Friday report. The last one should be Friday. I don't know why it offers that there Friday, but there we go. Friday report being generated. So yeah, so 29 to 26. That's the report we want. So we start here, and if we scroll down to the stock yield enhancement program, we can see that on Friday, basically we had our Greenwave shares, cost shares, and SunPower shares lent out. And 2/3 of our cost shares and almost all of our shares is set of Greenwave and SunPower, with an interest rate of 120% almost in costs and Greenwave and around 11% in SunPower. In comparison to that, yesterday, stock yield enhancement program, where are you? There. Yesterday, we still had Greenwave costs and SunPower lent out. We can see that the interest rate in Greenwave is roughly the same. It's increased by 2%. In cost, reduced by 20%, but it's still 100% interest rate. So if we get net fee rate 50%, which is the share that we earn for lending out our shares, that then the person that actually borrowed the shares has to pay twice that, so 100.28%. However, in SunPower, we can see an increase in interest rate from around 11%, 11.3% to around 36%. So that's quite a decent increase. Although a little bit fewer of our shares are lent out. So we see, oh, that's nice. So your internet is working stable today. That's nice to have you here. Always nice to have you in any of the streams. And so we see basically that no GameStop shares are lent out, despite that being the stock where we have the most shares in the account. We can also check, but 1 second. If we check here, we can see that there are 3 million shares available right now, and the interest rate to borrow them would actually be 0.5%. So compared to Greenwave, Cause, and SunPower, there seems to be no huge demand to borrow those shares. We can even see that the number increased. Yeah, so there was a little bit of a drop earlier, but now the number increased again, and the interest rate is fairly low. Make of that what you will. Gonna write that again. Yep, there we go. So yeah, if we look at the charts, so let's start with Greenwave. Things are unchanged. We're moving slightly sideways with a little down tendency, but we're still, yeah, it's still like basically considering the insane short interest that has to be there. So when people are willing to pay more than 100% in interest to borrow the shares, one would expect the price, or I personally would expect the price to drop more. But overall, we're still moving between a $1, yeah, like $1 and $2 range. It's remains to be seen if we eventually will have a break to the bottom, which obviously would be unfortunate for the shares that we're holding, although they are a small position in our portfolio. Or if eventually we'll get a move to the top, which could become quite expensive for people that are short, considering the high interest rate that they have to pay to maintain those positions. So yeah, that's still going to be interesting. Cost, we are still waiting for the confirmation. So again, I mean, we probably should go closer, but we're basically waiting for the confirmation to either see it turn out like A, B, C, and then we go further up, or this is already the A, B, C, and to make this a 1, 2, 3, and we go further up. So we're going to hold our shares. We're going to enjoy the short interest. It's also interesting that the interest rate that people pay to borrow shares is again quite high. Are you gonna? No, it's gone. Yeah. But that on the other hand, the price stays relatively stable in the $8 to $10 range. So again, I would not be surprised if we get a drop down to the like $6.50 area or so $7 to $6.50, then this would be A, B, C. Or that would then actually be A, B, C. Otherwise, if this would be A, B, C, we'd expect a bit of a bigger drop. Then we would actually consider now also $7 area would be a perfect overlap here. So I would not be surprised if this turns into some kind of A, B, C, and then 1, 2, 3, 4, 5 to take us down into the $7 area to finish a big corrective pattern. But it's still surprising to note that considering the high interest rate that people already pay to bet against the stock, the price over the last couple of days, so actually since last week, actually is trending slightly upwards. So that's gonna be interesting to see how it plays out. What kind of, did we already finish the corrective pattern down here, or are we still going to see another push down? And SPY, we looked at last time. So yesterday, not much happened. It went up a little, went down a little. Now we gapped up again. Again, considering that this movement here is pretty much a 100% movement compared to this, I'm fairly confident that this is actually A, B, C, and then we're right now seeing the first 1, 2, and now then stronger upward movement, wave 3, potentially. If this is already wave 1 and 2, then we would expect from here to actually, we need an extension, not an expansion. We'd actually expect to go at least to the 551, 544, or potentially 562, 565 area in the next strong movement. So there should be a couple of very, very green days ahead. If our capital wouldn't be occupied or bound to other positions yet, I definitely, as I mentioned yesterday already, I would have gotten call options here to simply trade based on that pattern. I mean, it can always turn out wrong, you know, nobody's always right. And again, it's just my personal opinion, not financial advice. Don't bet your house on it. But yeah, based on the pattern, I personally would go long here, at least till this area, and potentially, depending how the pattern plays out, till that area here. And yeah, Nvidia probably similar, or that we are still moving a little side. Well, we got another slight push down. That's going to be an interesting case. On one hand, we have a nice pattern that would be ABC, where we turn around at the 100% extension, and also for this 1, 2, 3, 4, 5 turnaround in the target area. Now the question is this indeed the next wave 1, 2, and we get our 3, 4, 5 push up, or in which case we again would expect, so would expect to go to 120, 123, or 130, 133 in those areas in a wave 3 movement. So it's another 1, 2, 3, 4, 5. Or we haven't finished wave C yet, and wave C can theoretically go down to 95 roughly. So that would be the wave C target area. And yeah, so that's why I would also, if I trade that, I would do it by buying call options. So and probably a couple weeks out. So even if I'm wrong and I have an early entry, there's still a chance that we first go to 95 and then the option recovers and still ends up in profit. Whereas if we would directly trade that, we would have to put the stop loss here at what low do we have here? 106.30. And then we have the problem if we just have a fifth wave to finish here. So if we just would get a fifth wave to finish here, we would stop out, take a loss, and then potentially see the next impulse wave up. So here a call option, in my opinion, the best play. However, expiration should probably be end of August, early September or so, to play it safe, which means the option comes with a certain price and so on. But anyway, my funds are currently all tied down or tied up in other positions, so I cannot do that on my end here. And yeah, then Barnes & Noble, yeah, still waiting to see how this turns out. If this turns out to be 1, 2, and we get wave 3 up, or if we come crashing down and the small investment there dies. FIFA, or yeah, Faraday Future Intelligent, so the electric car manufacturer, we are also waiting to see if this is already the finished correction and we'll get our wave 1, 2. That anyway would already need to be adjusted. So 1, 2, and now wave 3, or if that maybe will be A, B, C, and then we get another 5 wave down. So there's still multiple options on the chart here. But yeah, we have like a $40 investment in the 200 shares for $40. So it's really not that much, or $80, sorry, $80 investment in that stock. So it's really not that it matters that much. If they turn around, it could obviously be worth a lot in the future. If they don't, then the loss is definitely not substantial. GWAF we already covered, so waiting here. Cost we covered. Immersion, gonna be interesting. We got yesterday quite close to basically making a new all-time high, which would have allowed to say, okay, we finish wave 5 here. We fell short so far of the wave 5 target area, so it's still possible that this is actually going to be A, B, C, in which case we would probably go down to around 1081. So A, B, C, and then from there continue the journey upwards. So again, but I mean, here we're on a daily chart, so it will take weeks to see how this plays out, but it's going to be interesting either way. And SunPower, yeah, unchanged. So we had the huge drop after their bad announcement. Now we get to wait and see if this will turn into 1, 2, 3, 4, 5, and we go up. Probably their earnings, they should be reported soon, if I'm not mistaken. Will decide that, or if this turns into A, B, C, and then we go down, or if this movement here is already the entire recovery, and from here we go down. But again, we only have a very small position, so we can wait there as well. Now, with that, we actually pretty much covered all our positions. Yeah. So, what else do we have here? Tesla, interesting, yeah. So we haven't looked at Tesla for some time, but we can see that potentially if this is wave A, and then here we are expecting to have either two options. Either that's wave A and we have here wave B and we're already in wave C, or that's wave A and this is basically A, B, C for wave B, and then we go down further. And here we would have hit the minimum target for wave C and bounced precisely on it. So we bounced at 271 and the minimum target would have been at 271.28. Honestly, it probably is going to take, I mean, that's even a monthly chart, but it's probably going to take a little bit longer to see how this plays out if we still get a little bit room up here. If that will turn out as A, B, C, or if that is already the entire correction and this is the next 1, 2, 3, 4, 5. For that, we could sublabel this area here to see if it's 3 waves or 5 waves. On the monthly chart, it looks more like 3 waves, like A, B, C, which would support the idea that this will be a big A, B, and C. On the other hand, if we assume that here's another 5-wave pattern, then we also would need 5 waves here. So 5 waves, 3 waves, 5 waves to make this an ABC pattern where we go further down. Anyway, so if there are no wishes in quotes or questions, then that's it for today. I know it's not super exciting. I think the next in quotes exciting stream will be either this Friday or on next Monday when I have to, so when my current options expire, and I therefore have to also look into what next options I'm going to sell. But other than that, again, if there are no questions whatsoever, then we're gonna call it quits in a second. For a change, we can use our 8-ball again and ask the 8-ball if GameStop will break below the 22.31. So will GameStop fall below 22.31? Okay, no result. Will GameStop fall below 22.31? My reply is no. Okay, so I'm gonna keep a note of that because it's hard to always keep track of all the forecasts. Today we have Tuesday. No. Okay, so let's see if the 8-ball will be right or not. And yeah, so thanks Akashi for stopping by. Thanks everyone else to tune in. I hope you were able to take at least something away from today's episode of Daily Market Mastery. Again, don't forget all the resources are linked in the description down below, so you can check things out for yourself. And besides that, I'm gonna leave you to it and then see you all probably tomorrow. So same time, same place, around 5 minutes before the markets open in another live stream. So again, I'm switching here. Thanks for tuning in. See you all real soon and have a great rest.